Hey, today we are going to do a medium-term analysis of the crypto market. The first variable we are going to look at is Bitcoin dominance. Dominance is the weight that an asset has in the market. Bitcoin dominance is the market cap of Bitcoin divided by the market cap of the crypto market. Bitcoin dominance go down when bull run starts, January 2021. Bitcoin dominance go up in bear market, November 2022. Usually, the dominance of Bitcoin is around 50%, and the dominance of Ethereum is around 18%. As you can see in the graph, the red arrow means the beginning of the bull market, and the blue arrow means the bottom of the bear market. In the following table, we can see the relationship between the three variables: Bitcoin dominance, Bitcoin price, and altcoin price. In the first case, up, up, down, means that the money is going from altcoins to BTC. Therefore, the dominance and price of BTC go up, and the price of altcoins goes down. Up, down, down, a lot. Since altcoins are more volatile than Bitcoin, they will fall more than Bitcoin when BTC falls, and its dominance rises. This occurs when it makes highs in the bull run and begins a bear market. The money that has entered the altcoins during the bull run leaves the altcoins to go to the most stable and safe value, which is BTC. Up, sideways, sideways. It is a situation that hardly has any significance because this rise in BTC dominance is not reflected in its price, neither for worse nor for better. Down, up, up a lot. Beginning of the bull run. As BTC dominance falls but the price of BTC rises, it implies that the dominance of altcoins rises because money goes more towards altcoins than towards BTC. Since altcoins are more volatile, when the bull run begins, the money goes to altcoins since you will obtain higher returns than in BTC. Down, down, sideways. Because as BTC dominance falls, it implies that money leaves BTC and goes to altcoins. Then, even though the price of BTC falls, this negative factor is offset by the rise in the dominance of altcoins. Down, sideways, up. In this case, when the dominance of BTC falls, the dominance of the altcoins rises, and by not having the negative factor of falling the price of BTC, the altcoins will rise. Also, it is important to follow the correlation between Ethereum and Bitcoin as well as their dominance. Now let's start with some metrics on chain realized price hold waves. Each colored band shows the percentage of existing Bitcoin that last moved within the time period. As we can see, holders of less than 1 year rise with the rise of the market and fall with the fall of the Bitcoin price. In contrast, long-term holders increase their positions when the market is bearish and decrease in the bearish market, i.e., these investors buy low and sell high. Net unrealized profile loss, NUPL. This metric tells us the difference between unrealized gains versus unrealized losses. It is calculated by subtracting the realized value from the market value. The market value is the current price of BTC multiplied by the number of coins in circulation. And the realized value is the price of BTC when it was last moved, that is to say, the last time it was moved from one wallet to another. The average of all those prices is multiplied by the number of coins in circulation. This metric is used to track investor sentiment over time for Bitcoin. When market cap increases much faster than profit taking, we see that the market is overheating, one could say due to investor greed, red band. We can break down different percentages of Bitcoin's relative unrealized gains losses to determine what stage of the market we are in. This can be advantageous to the long-term strategic investor. There are 5 phases which are divided into: capitulation, in red; hope, fear, in orange; optimism, anxiety, in yellow; belief denial, in green; euphoria, greed, in blue. The accumulation trend score is an indicator that reflects the relative size of entities that are actively accumulating coins on-chain in terms of their BTC holdings. The scale of the accumulation trend score represents both the size of the entity's balance, their participation score, and the amount of new coins they have acquired sold over the last month, their balance change score. An accumulation trend score of closer to 1, purple color, indicates that on aggregate, larger entities, or a big part of the network, are accumulating, and a value closer to 0, yellow color, indicates they are distributing or not accumulating. With this indicator, we can see that the larger entities are accumulating. Open interest is the value of contracts that are open at a given period of time. The value is usually denominated in USD or BTC. So to calculate open interest, we sum up all of the open positions at that time, whether they are long or short positions. If more traders open positions, then Bitcoin open interest goes up. If traders close positions, then open interest goes down. Therefore, it gives an overall view of how much money is moving in and out of the Bitcoin derivatives market. The Fear and Greed Index is made up of 4 bands. So 25 extreme fear, 25 to 50 fear, 50 to 75 greed, and 75-100 extreme greed. As you can see, buying in extreme fear and selling in extreme greed is a strategy that works in the long term. It tells you that it is better to buy when the market falls and there is fear, and sell when the market rises and is in extreme greed. It must be taken into account that cryptocurrencies are an asset with a long-term time horizon, as we can see with the returns obtained in recent years. In 7 of the last 10 years, Bitcoin has been the most profitable asset, and in the other 3 years, the least profitable. Then we see that it has a high volatility in the short term, but a high profitability in the long term. Cryptocurrencies serve as an additional source of diversification in an asset portfolio by having a very low correlation with the rest of the assets, which is less than 20%. And it provides a great return to a global portfolio without adding much volatility. If in the last 10 years you add 10% of Bitcoin to a global portfolio, 60-40, you would have obtained more than double the return, going from 5.04% to 11.42%, and only 2% more volatility, going from 8.93% to 11.61%. In short, adding a percentage of Bitcoin to the portfolio provides much more return than volatility in the long term, and serves as diversification by having a low correlation with the rest of the assets. Right now in the short term, the Fear and Greed Index is in extreme fear. Bitcoin open interest is up, price is up. Bitcoin dominance is down. NUPL is in optimism phase. Holders of less than 1 year rise with the rise of the market and fall with the fall of the Bitcoin price, and right now are rising. Then buy at these levels Bitcoin, 58,000 USD. Sky Crypto, be the first.